Welcome to this explainer where we are going to bust the myth of the flawless AI moneymaker. We've all seen the breathless promises of automated riches online, but today we're digging into the hard data to see what actually happens when the two biggest heavyweights in artificial intelligence, ChatGPT and DeepSeek, step into the financial ring together.
I mean, it's literally the million-dollar question, right? Can AI really beat the stock market? There's just this massive, viral hype surrounding AI and finance right now. People are treating these large language models like they're magic ATMs. You just type in a prompt, and boom, out pops a winning stock portfolio. It sounds incredible for sure, but as we peel back the layers of all this hype, we really have to ask ourselves, are these tools actually the Wall Street oracles that people claim they are?
To really grasp the hype, you have to start with this number right here, 500%. In a hugely circulated study from the University of Florida, researchers fed over 67,000 financial headlines into ChatGPT. And based on the AI's sentiment analysis, they simulated a trading strategy that generated massive 350 to 500% cumulative returns over a 14-month period. When numbers like that hit the internet, it spread like wildfire. It's no wonder people started handing their portfolios over to chatbots.
But okay, let's bring this narrative back to planet Earth for a second. 51%. The lead researcher of that exact same study added a totally critical caveat that almost everyone seemed to ignore. On any individual stock pick, based on a single headline, the AI's accuracy was actually just 51%. That is barely better than a coin flip. That huge 500% return only worked in a backtest because it aggregated hundreds and hundreds of trades to eke out a tiny mathematical edge over time. For picking your next individual stock trade, you're essentially just gambling.
And you know what? It actually gets even riskier. AI has a severe hallucination risk. Because base models like ChatGPT 4o and DeepSeek don't have real-time market awareness straight out of the box, they just guess. In fact, National Institutes of Health Studies have found that up to 47% of AI references can be completely inaccurate in these contexts. We are talking about the AI confidently inventing revenue figures, fabricating corporate mergers that literally never happened, and even making up fake stock tickers. If you're risking your own capital, a highly confident hallucination is incredibly dangerous.
So here's our game plan for this explainer. 1. The big AI lie. 2. DeepSeek and the Quant math test. 3. ChatGPT handling news and sentiment. 4. The data privacy and cost wars. And 5. Deciding which AI is actually the overall winner.
All right, let's kick things off with round 1. DeepSeek, Quant math, and the balance sheet test. The benchmark scores brilliantly illustrate exactly why DeepSeek absolutely shocked the tech world early this year. On the Math 500 benchmark, which tests really complex algorithmic problem solving, DeepSeek R1 absolutely crushes ChatGPT's standard GPT-4o model. We're talking about a 97.3% accuracy rate for DeepSeek, compared to just 60.3% for GPT-4o. In the realm of pure, theoretical quantitative math, competitive programming, and algorithmic logic, DeepSeek's reasoning model is an absolute monster.
But how does all that genius-level math actually hold up in the real world? Well, a CPA named Hector Garcia ran a really fantastic practical test. He took 3 messy PDF profit and loss statements from different business entities and asked the major AIs to consolidate them into one clean spreadsheet. Despite those sky-high benchmarks, DeepSeek completely stumbled on the friction of everyday use. While trying to process the documents, it repeatedly hit server-busy timeouts. And when it finally did work, it got stuck on basic document formatting and failed to properly extract and align specific line items. It really proved that raw mathematical horsepower doesn't always translate into a smooth, functional tool for your everyday financial workflows.
Let's move right along to round 2, ChatGPT, live news and sentiment analysis. Before we dive into the data here, I want to pose a somewhat counterintuitive question to you. Does forcing an AI to, think harder actually produce better financial sentiment predictions? You'd probably assume the answer is yes, right? More deliberation should naturally mean better stock analysis.
Well, a fascinating research paper from BlackRock tested exactly this, and the results are pretty stunning. The data shows massive spikes in completion token counts when looking at the difference between fast and slow reasoning methods. This happens because reasoning models, the ones that are forced to think step by step, generate massively higher volumes of text just to analyze really simple financial headlines. They basically write paragraphs of internal monologue before finally answering the prompt.
So the absolutely crucial point is this. For financial sentiment, that massive volume of thinking actually hurts the AI's accuracy. The research has found that ChatGPT's fast, non-reasoning mode, which acts sort of like our human intuitive System 1 thinking, actually aligns best with human financial sentiment. When the AI is forced into that System 2 deliberate reasoning mode, it essentially overthinks the headline, injects noise into the data, and just gets it wrong. For stock news, you don't want the AI to write a sprawling thesis. You want a fast, intuitive read of the room. And standard ChatGPT excels at exactly that.
Let's pivot to round 3, data privacy and the cost comparison.
If you're a developer trying to build an automated trading bot, the API cost per 1 million input tokens presents a pretty stark reality. OpenAI's flagship GPT-4o is going to cost you about $2.50. DeepSeek v3? That costs just 27 cents. You can run DeepSeek for nearly a tenth of the cost of ChatGPT. For a startup or a developer processing massive amounts of financial data, that is quite literally a unit economics game changer.
But hey, as anyone in finance will tell you, there is no such thing as a free lunch. You always have to weigh that cost against privacy. Let's look at the facts completely impartially here. DeepSeek offers incredible cost savings, but its cloud API routes data through China-based servers, which definitely raises some compliance questions for regulated financial institutions. However, it is MIT licensed open source, meaning you could absolutely host it yourself if you have the engineering team to do it. ChatGPT, on the other hand, costs a lot more, but its enterprise tiers offer established regulatory compliance, SOC2 certification, and data that is processed on US-based servers. If you are handling highly sensitive client financial data, you just have to decide if the cost savings of DeepSeek actually outweigh the regulatory safety of ChatGPT.
And finally, the final verdict. Which AI is the winner?
Honestly, the real winner maps directly to what you are actually trying to achieve. If you're a quantitative developer on a tight budget, building complex algorithmic logic, or processing millions of rows of data where API cost is king, DeepSeek is absolutely your winner. It just rules pure math. But if you're analyzing daily market sentiment, building a production-ready app that requires strict enterprise compliance, or honestly, if you just want a polished tool that can easily read your PDFs and format clean Excel sheets without crashing, ChatGPT remains the undisputed champion of everyday usability.
Stop looking for a magical AI oracle and start building a real financial workflow. The big takeaway from all this source data isn't that AI is useless. Not at all. It's that general-purpose chatbots aren't magic stock pickers. If you rely on a single prompt to make your trading decisions, you are flipping a coin with a machine that frequently hallucinates. But if you use DeepSeek to cheaply process massive amounts of data, or you use ChatGPT to quickly gauge the sentiment of a breaking news headline, and then you plug those specific insights into a verified multi-step investment system, well, that is where the real edge is found. So I'll leave you with this. Are you going to keep gambling on a 51% coin flip, or are you ready to use these tools to build a system that actually works?